Hello everyone, I'm by the names of Joshua Senyange, here to break down a brief ideology that I do usually follow, though it tends to have its downside and it's something that I'll fail to actually clean out within this system, but it has a tiny bit of an edge over the market. Rather than actually participating in the internal price action of the day, which is very confusing, it's not very expansive. You can't deny the fact that whoever trades such ideas might get some bits, but I actually wanted, since I'm a swing type of trade, I actually devised with the years of I've been in the trading industry. I actually came up with this idea, with this trading psychology or this trading strategy on how to cleanly approach the market in terms of swing points and swing levels. As we could, as one could look at my previous video, we had the gold chart as you can see here still. But in my previous video, I was still anticipating prices to actually come from this moment here. I don't mind about those tiny buys that were in there. That's also another strategy that one could actually entry model that one could actually use, though its swing rate might be staggering, but it might give you some scalps if it's a good day, like as you can see in there, also in there, maybe also in there. We got some hits in there, but overall the general entry model that we have is maybe anticipated buyers to actually come within that market, maybe push prices higher and higher. But according to what we saw, this resistance level, this area of supply that was actually engineered right at that very level, had some bit of power over the market, though it might have not fully expanded, but whereby we could have expected it to actually go to this market zone there for it to actually be verified as a true reversal, and maybe we anticipate sellers to actually maybe follow through. But still, with the downside of some setup might stop out, which is okay. Stop loss is a part of the game, but the other downside of it, there are trades that try and fail, and by the nature of by as in by the kind of trader I am, I look to swing actual moves that might give us good expansion. As you can look at this trade struggled around and eventually was stopped out, as you can see. Was stopped out, as you can see. Did expand. Then on a Friday we saw this setup forming and prices seemingly expanded higher and higher, taking out that high with the potential. Since gold is very expansive, if it decides to actually expand, you might expect it to actually go back to 5,000 the level. But in the actual sense, the actual trade that we could have traded would have been from that moment there, as you can see. But my emphasis is around this area, whereby we take our trades on the 1 minute chart, take our entries on the 1 minute chart, as you can see. Wait for prices to actually break structure above, then breaking structure above, we simply wait for an impulse correction impulse, something that seems like this, as you can see. Okay, like in this very context, we have to put a stop loss there, but in the overall, due to the experience I've had with gold, prices could be surely maybe take off that level, could surely take out that level, could surely take out that level. So that's why we consider the swing below where it actually started from. As you can see, prices might have taken out that point there, whereby we had to look for another entry model which could have mere simply been this. Oh, but with that idea that we had there, that was our entry. We got the expansion with expansion from that low prices actually broke structures higher, good and impulse question, impulse prices actually expanded 3% to 2%, as in twice the size of that initial area of demand. That initial area of demand. So when prices are giving us that expansion to that level, we hoped for prices to retrace back to that level and give us an expansion. Though with that being said, I had to place my stop loss right there. At times you could mark our initial area of demand since we are looking for buying, and its initial stop loss would actually be expanded below that level. But according to this, it was within that range. We have to obviously consider the previous low where it actually started from. So as you can see, prices seem to be expanding. It gave us a beautiful expansion. I don't know whether it's actually going to stay around maybe and continue pushing itself high. It might poorly trend towards the 5,000 mark. I do that, or simply